Do you have a 2022 crystal ball for the overall markets? They keep going higher?
We do. We're cautiously optimistic, but expect a lot of volatility. Since September, you've had two 5% corrections and then very quick rebounds. We're expecting that type of activity next year. We think there is going to be a change in leadership. Some of the things that have done great this year are going to slow down, and some sectors and industries that have been dogs, we expect them to do a whole lot better.
Yeah, and of course, we're going to start with one of your stock picks, David, and I'll just be clear, it's a homer for our industry. We're owned by Comcast. It's our parent company. It's the only stock that I and others are allowed to own, so I'm happy. We didn't ask you to say it, but you think Comcast is a good bet next year.
We think next year you're going to be happy. Comcast is a great example of that. The stock has underperformed significantly this year, though business is very good. Earnings are up significantly this year, and they're going to be up in the mid-teens next year and the mid-teens thereafter. And it still sells at 13 and a half times earnings. Very smart management buying a lot of stock back. We think this is a great opportunity over the next 18 months in a market that's pretty richly priced.
Yeah, and you obviously don't feel that Comcast is richly priced. You think the valuation, again, our parent company, is fair?
13 and a half times earnings. It's significantly undervalued. And we think there are lots of opportunities like that. It's a market of either haves or have-nots, and Comcast clearly is one of the have-nots, and we think that's going to be some of the best places to make money. Also, in a similar industry, Viacom sells at under 8 times earnings. We think they're going to be a winner in streaming. It pays a 3% yield. So, those are the type of companies that we think are going to be the best places to make money next year. We'd be particularly wary of the very highly priced growth stocks. Anything above 50 times earnings sets off a red flag for us.
Yeah.
We think you want to stick to lower valuation type companies.
And another name you like quickly is M&T Bank. Why? Kind of a bank that doesn't get a lot of love or attention.
Exactly. It's done okay this year. They're about to close a acquisition, and we think when they do that, the stock is going to be freed up to do a whole lot better. They just raised the dividend over 10%, sells at about 11, 12 times earnings. We think they benefit by higher rates. We think higher rates are a certainty in the upcoming year. Very good loan portfolio, very attractive valuation. Financials are one of the few groups that did very well in 2021 that we're expecting a repeat in 2022.